Greetings, fellow profit and loss lovers out there. It's Brad Flynn here with another quick hack for how to read your profit and loss statements. Okay, so this is how, whenever I get a profit and loss statement, I do a quick, minute or two assessment on it to see what's going on. Now, most packages will let you export the P&L or any of the other financial statements into a spreadsheet, which is what I've done here. Okay, so the first thing I do is go right to this sales column. I want to get a feel for what all the other expenses are within this table with relation to our total revenue. So here's how I do it. I go equals this cell divided by this cell. Now, if you're not a spreadsheet guru, you don't need to understand this. You just need to see what I'm doing. And you go $ in between that one and $ in between those two. And what that does is nail these calculations down relative to that actual number, okay? So obviously, a million as a percentage of a million is 100%. I then take this and click and drag down, which is why it's important to have that reference nailed down there with the $signs. We don't need to see that, although it's interesting why that's doing that. Let me have a quick look here. Looks like this doesn't like the spaces, so if I put that back over there, there we go. So on this particular business, here we go. We can see that the cost of goods is 43%, which means that the GP, gross profit, 573 out of 1,000 equals 57%. Remember, total revenue less cost of sales gives us our gross profit or gross margin for the business. So that's 50%. So looking at this, it would probably be a combination of products and services that would have that figure there. Now let's look down through the rest of the figures. 1% on accountants. Yeah, that seems a little bit high for a business this size. Maybe 1%. Yep. Advertising, 15 grand. They want to make sure they're getting a return on that for sure. Interest. So they've got some loans in that here that are important. They can tax deduct their interest off their P&L. Postage, etc., etc. So all the way down, and wages, as always, is one of the biggest expenses. The good sign here as well, 9% profit, 49% fixed expenses. Now, what I then do, and just an interesting thing here, EBITDA, you might have seen this, operating profit, EBITDA, EBITDA stands for earnings before income tax, depreciation and amortization. So I might do a little bit more on that in another video. But what I then do is look at the Australian, for me, because I'm in Australia, the benchmark. So most countries will have a benchmark system so you can compare, based on those percentages, how the business is going. So let's look up a bakery service here. So if I click bakers, all right, and it brings up the figures. Now, unfortunately here, my screen is going outside. So what I'm going to do is just bring this in a little bit so you can see what's going on. Okay, so over here you can see that for a baker, the average cost of sales here for a business this size is these figures here. So the average cost of sales is this. All right, so in this instance here, for more than 750, it's saying that a baker is 30%. So this probably isn't a baker thing. So the figures are different. But it'll give you a range of the other expenses here so that you can then go back to your breakdown and see what's working in terms of the business and what's not working. So I go into depth a lot more on some of my other online programs and that on how to work that all out. So there you go. That's how I do a quick assessment of a profit and loss. Hope that's been valuable to you. Put your comments in down below. Subscribe to the channel so I can keep you up to date with all the latest videos. Have a great day.